essentially fundamentals won over, right? There were big spikes, very short spikes whenever something happened, especially in the Middle East. I think it's the same thing. What we have to watch out for is the upward pressures and the downward pressures. The downward pressures are, the big supplies, new supplies coming in from mainly US, Brazil, Guyana, and so on. But so non-OPEC countries. And we also have to look at the Chinese economy, which has really been sputtering along for the better part of this year. They have taken stimulus measures, but whether they take and how they take is another question. The other question that we haven't really been so aware of is just how quickly China rolled out its electromobility, which obviously had big implications on diesel and gasoline demand.
What about President-elect Trump's mantra of drill, baby, drill? Obviously, we're expecting some difficulties in really getting to that level of a production hike. So what say you?
Well, I say the same thing. And what I really say is with when you look, the U.S. is the largest producer now. So that's quite big. The other thing is, banks are not as willing to just lend to shale production and so on as they were in the noughties when shale took up. They have a much more stringent return criteria. And if there's too much oil, if there's an oil glut, prices will go down. And quite a bit of shale production will no longer be viable commercially. And also there's new offshore production, mainly in Brazil and in Guyana and Namibia, which is sort of scheduled. And offshore is an expensive game, so that will have an impact on that as well.
What did you make of the latest price action? Of course, we did see prices coming back down just a little bit, but definitely there was a boost coming from new sanctions on Russian oil last week and expectations of tougher sanctions on Iranian supply as well. Do those expectations and sanctions effect stay in the price?
Absolutely, they will affect the price. And you look at especially Iran, because Iran has sort of, upped its production immensely. Only since 2022, it's gone up 800,000 barrels a day. So that's nearly 1 million barrels a day. So if some of that is taken off, that will have an impact. And what we'll have to see is if there is a trade war coming on or more trade frictions between China and the U.S., China may be more hesitant to buy, sanctioned barrels to make nice with the U.S. Mind you, though, we still have OPEC Plus, which wants to reverse some of the 2.2 million barrels a day over 18 months of voluntary cuts by 8 countries. So if that goes in and OPEC Plus comes in, that will stabilize the price again.
And you don't really see much of relief coming from the FOMC staying dovish in 2025?
Well, that will be a relief. What I'm seeing a lot of, if the FOMC, and not just the FOMC, other central bank currencies banks
right.
stay dovish, that will be helpful. But I put that against the sort of a trade tit for tat. You look at the IMF and they said if we really go ahead with all the threats made on trade, that could take out of the global economy the equivalent of a German economy plus a French economy. And that sort of a hit would clearly not be positive for oil demand.